All right. Good morning, you magnificent melon heads. Happy Tuesday, everybody. I hope you are well. Welcome to my Tuesday morning live stream. We got kind of a flat day going on right now. Looks like stocks are set to open, maybe up a couple of points. Not really making that big of a move. Commodities are down this morning. They can't all be green days. Gold and silver getting smashed a little bit right now as we speak. Well, again, they can't all be up days. I'm not too worried about that, but we'll keep an eye on that. But the big thing I want to talk to you guys about today is this impending food shortage and how it just seems like every story and every decision at every level of government and in industry and in the world and geopolitics and all of it is just seemingly making it worse. And the more people I talk to, the more I realize nobody outside of FinTube, outside of financial YouTube, nobody knows it's coming. No one. I was talking to family and friends over Easter. Nobody knows what's coming. Unless they watch these channels, unless they read the news like we do, just nobody sees it. And it's, I don't know, is it depressing? Is it worrying? It's a little of both, but it's alarming, really. People have no idea what's coming. They're just going about their day-to-day lives. And, well, all we can do is continue to try to raise the alarm, right? That's all we can do. But before I do that, I just want to say hi to everybody. I see some familiar names in the chat. I apologize. I got a little bit of a frog in my throat this morning. As you know, I am not a morning person. I got my wake-up juice in hand. It will hopefully help me get through the day. By the way, I need to get something on my mug that says "Advertise here," something like that. Would-be sponsors. Wink, wink. Hint, hint. Also, hi, Mom. Hi, Dad. I love you guys. I hope you guys are doing all right. We were crashing at Mom and Dad's this weekend. All the grandkids pitter-pattering around all over the place, driving everybody's nuts and making a mess. It was a good time by all. All right. Let's shrink my big, fat melon of a head. And let's just see what markets are up to this morning real quick before we get into the food story. Right now, it looks like the S&P is set to open pretty much flat. We were up a point a second ago. Now we're down 8. Dow looks like it's going to be down about 30 points or about 0.1%. NASDAQ leading the way lower, down about 0.3%. Speaking of NASDAQ, we've got Netflix earnings coming out later today. And I do not anticipate a good quarter from Netflix. All right, let me just say that. Think about it. What is the one thing that people cut when times get tough? What's the first thing they do? It's one of three things. Either eating out less, fewer vacations, or canceling subscriptions. And I think people will probably cancel those subscriptions before they do the other two. So that means Netflix, as people's budgets get tighter, as food gets more expensive, and energy gets more expensive, Netflix is going to have a bullseye on its forehead. People are going to be cutting those subscriptions soon. I don't think Netflix, have they ever reported a quarter of net subscriber losses? I don't think they ever have. Man, that would be a brutal day for Netflix, though, if that happens. I mean, right now, if subscriber growth just comes in a little light, they get hammered. But keep your eye on Netflix. I do not anticipate good things from Netflix. And again, all CNBC and all financial press knows how to talk about is tech stocks. They certainly don't talk about impending food shortages very much or fertilizer crises. No, they only talk about Cathie Wood and Amazon and who's trying to buy Twitter and tech. That's all they talk about on TV is tech stocks. And it's getting a little long in the tooth. It's getting boring because the big story, they better get with the program. It's going to be precious metals and commodities, folks. That is going to be what's going to rule probably the next 10 years in finance world, where for the last 10, really 20 years, it's been all about big growth tech stocks. It's going to be back to basics for the next decade at least, if not worse. So keep your eye on the NASDAQ as we go through the day, and especially tomorrow, and then in the next week when we've got Google and Amazon and Microsoft and all the big tech names report. Who knows what we're going to see then. Looks like oil is down about $3 a barrel right now. I'm a little surprised to see oil down because OPEC is really struggling to increase its production like it's been promising to do. And a lot of these production increases are already priced into the market, and we're not seeing those. So I think oil right now, maybe it trades sideways, maybe it comes under a little pressure and goes back under 100 one of these days. But it feels like there is a spring being compressed and coiled up underneath oil prices. That some geopolitical event will take the top off and it will rocket higher. I don't know when that happens or if. There's any number of issues, be it China, Korea, Iran, anything, continued escalation in Eastern Europe, all of which would drive oil prices higher. There's not really a lot that would drive oil prices lower short of a major global economic slowdown, which we are kind of seeing in China, aren't we? So we'll keep an eye on that one. And I would be remiss if I did not talk about the 10-year Treasury yield. Look at this. Onward and upward right now, 2.92% on the benchmark U.S. 10-year Treasury yield. If you would have asked me even 1 month ago, do I think we'll ever see 2.92 on the 10-year Treasury again? I would have told you no. Maybe not ever. I would have said not before some major market crash and paradigm shift in the way we do business. I'm really surprised to see yields just continue to march higher like this. And yet there they go, man, 2.92. I mean, I'd said for months that 2.2 was going to be where something breaks, and we are obviously well beyond 2.2, aren't we? And with the U.S. Treasury now at 2.92, the MMM or the 3MRI or the M cubed is now at 228. I saw somebody in the comments before we started here was asking if am I going to look at the 3MRI? Absolutely. 228. This is 2 points shy of the highest reading since 1987, since Black Monday. Higher than the dot-com bubble. Higher than the global financial crisis. Higher than the bond market massacre. Higher than the Powell pivot and the pandemic. Above all of those. And remember, we have a debt-based system. We have an even bigger mountain of debt than we've ever had before. So something has got to give very soon. I don't know what it will be. I don't know what will be the pin that pops this bubble. If you would have asked me last week, I would have said it was bank earnings. And the bank earnings came in every bit as bad as I said they were going to be, but it was not enough to pop this bubble. Will it be big tech earnings next week? Maybe. Maybe not. Maybe this market just keeps grinding sideways. But the risk continues to pile up, folks. Be wary of that. And looking at the MMRI, Manarino's original indicator, even that is getting up into almost in the high risk territory. We're at 182 right now. So risk is piling up across the board here. And let's just take a look at the chart. Now, this is the revised chart. This is not my chart. This is Carter Worth's chart that I talked about in my live stream on Friday, the logarithmic scale for the U.S. 10-year Treasury yield. And again, credit to Carter Worth. His chart was just better than mine. But we've even now blown above Carter's line here. We're well above where we've been. Again, the risk just continues to pile up. I see Mike Binder is in the Super Chat, sir. Thank you, Mike, very much for your support of the channel. Appreciate that. From Robin RC Models. He says, I wonder why few talk about what's going to happen in a couple of months in the media. Then I remind myself who owns the media and Twitter. Yeah, Mike, the media narrative has 100% shifted to Russia, Russia, Russia. Everything that goes wrong economically is now Russia, right? Where 3 months ago, everything that went wrong was COVID, COVID, COVID. And I don't know if I can you say COVID on YouTube yet? Are we allowed to say COVID now? I don't know. I don't know if I just got myself shadow banned. I mean, the mask thing and the planes, and yay, we can take the masks off on the planes now. Does that mean we can talk about it on YouTube? I guess we'll find out. But the media likes to pick their reason for everything going wrong, and it's never government spending. It's never reckless borrowing in every facet of the economy, all the way down from the individual up through federal governments. We never talk about reckless spending, how it's just institutionalized in our system at every level. That's never the problem. No, it's Russia. It's the pandemic. There is a reckoning coming because you see this chart here, rates heading lower. Zero is getting closer. All right. And we can't print money anymore because of the inflation problem, at least not until things get really bad. So will the press ever admit to that? I don't think so, because the press is run by Keynesian economists. It's owned by Keynesian economists. And man, they are all throwing a fit. Like the Washington Post is all up in arms over Elon Musk trying to buy Twitter. Are you kidding me? The Washington Post, which was bought by Jeff Bezos, is angry that Elon Musk wants to buy Twitter. Self-awareness much? Anyone? I just throw them out there. You guys do what you want with them. Anyways, Mike, as far as what the media is going to do in a couple of months, the media will probably they'll continue to demonize Russia. They'll look for a new target. They'll probably try to blame the greedy food companies, or somehow they'll blame one of their usual targets. They certainly will not blame ESG investing, which has denied capital to the energy industry, which has resulted in an inability to produce enough fertilizer, which means we can't grow enough crops. They'll never admit that they had a hand in that. They might even blame climate change for the decline in crop yields. I don't know. They'll try something that fits their narrative. And most people will just gobble it up, because most people don't even read beyond the headlines. And if you don't read beyond the headlines, then you'll think what they want you to think. But thank you very much, Mike. I really appreciate the super chat, sir. I appreciate the support of the channel, as always. All right, let's go back. And I talked about how, in the title and the thumbnail, that the world was just ignoring the food crisis. And I saw a couple of things today. I did a real quick search this morning, and I want to show you a couple of these articles that I just found. This is in Euractiv. I don't know the name of this. I've never seen this website before. But see if you notice a trend here in a couple of these headlines. Kosovo to ban certain food exports amid food security crisis. Kosovo will temporarily ban the export of some food items amid the global food, energy, and fuel crisis, according to a government announcement. This was just a couple days ago, April 15th. The decision has been taken to ensure that citizens have access to essential basket items, including wheat, corn, flour, cooking oil, salt, sugar, Prime Minister Albin Kurti said. So this is price controls. This is governments panicking that it's getting too expensive to eat, and so they're banning food exports to try to suppress the prices within their own borders. Right? And we are going to see more and more of this. This is hoarding. This is prepping at a national level, and this is starting all over the world. And that's fine and dandy. Well, it's not fine and dandy. Price controls never work. But if you're a food exporting country, you can do this. What if you're a food importing country? Well, that means that the export market that you are trying to buy from just got more illiquid. Prices are going higher. And your people are going to starve, because food importing countries tend to be the poorer countries. So, and look, price controls like this doesn't work, because put yourself in the position of a Kosovoan. Is that the word? Do you say a Kosovoan? Of a farmer in Kosovo. Put yourself in his position, right? Your energy costs went up. Your fertilizer costs went up. Your labor costs went up. You can't get parts for your tractor. And now the price of your produce, the price of your crops, is being suppressed by the government, because you're not allowed to sell it into the more lucrative export markets, because the politicians are worried about their short-term poll numbers. So they're going to actually put farmers out of business. It's going to result in even less food being produced. Price controls don't work. I don't know how many times we have to say it throughout history, how many examples of price controls just not working. There it is. And folks, look, Kosovo alone does not a trend make. So, look, here we go. Turkey to temporarily suspend some exports to prevent a food shortage. Ukraine railways limit exports of some food staples, consultancy says. All right, I understand why Ukraine would do it, right? Ukraine, they're in a war. I mean, it makes sense. It's exigent circumstances. But wait, what do we have here? Oh, yeah, cookies, lots of cookies. Kazakhstan restricts grain exports due to tightening supplies. There's another one. We want to eat. Syrians demand halt to food exports amid rising food prices. One by one, more and more countries are banning exports to try to suppress food prices within their own borders in order to keep their populations fed and happy. And again, when people get hungry, when it's too expensive to eat, people get angry and pissed off, and it results in things like the Arab Spring. So I am not at all surprised to see Syria want to do this. Syria is still fighting a civil war over the last time food got this expensive. All right. Well, I just bumped my mic there. I see Mr. Troy Rhodes. Thank you, sir, for the super chat. He says, what do you think copper's going to do? Thinking about getting into copper mining shares for a limited time. Let's look at the chart of copper, sir. Right now, copper's down almost 2% today. I have to be honest with you. I'm not crazy about the base metals. All right. Um, I have a theory. Let me just start by saying the price of everything will continue to rise. Okay, so you have to take that in context, right? Everything commodity based is going to get more expensive over the next 10 years. I don't think base metals are going to keep pace with inflation. We're going to have this mayhem in the metals markets like we saw with nickel, like we're starting to see with zinc. We very well may see it with copper, right? Where we get these shortages and these breakdowns in the trading markets. But step back from the mechanics of the market and the trading and the shenanigans that go on with the shorts and the hedgers and look at China. Because China, for the last 30 years, really has bought half of the world's copper, half of the world's concrete, half the world's steel, half the world's aluminum. It's all gone into China. Well, China is not going to be building anymore. They're just not. China already has a glut of real estate, and their population is in the process of collapsing. So, over the next 10 years, almost half of global base metal demand in order to feed this construction in China is going to evaporate. And I don't want to be invested in base metals when that happens. So, short term, base metals, copper, zinc, aluminum, all those, probably going to run along with everything else, but it's not something I'm looking at long term. I think when the dust settles from this inflation storm, those metals are going to be in a world of trouble because their demand is just going to be gone. Nobody's going to be building skyscrapers. And if you're not building skyscrapers, you don't need plumbing, you don't need wiring, you don't need copper. I know the electric vehicle thing. I don't buy the electric vehicle story. I really don't. I don't think every car on the road is going to be an electric vehicle by 2020, whatever. I really don't. It just requires way too many, rare earth metals to make the batteries, and it requires such monumental changes to our power grid that, look, we can barely maintain our power grid as it is. We're not going to completely overhaul our grid in the next 5 years so that every car on the road is an EV. So there's a lot of people out there saying electric vehicles, copper demand's going to explode. I really don't think that's going to happen. At least not in the time frame that's being advertised. So I'm not crazy about copper, but I do think, Troy, in the short term, it's probably going to do well. And then I have to throw out all that CYMA stuff, not a financial advisor, not financial advice. Do your own research, your own DD, arrive at a decision right for you. Got to cover my butt, sorry. But thank you again very much. I appreciate the super chat, sir, and the support of the channel. Okay, speaking of commodities, let's see, because we have kind of a lot of red going on in commodities right now, right? Here's just looking at the commodities board. Yep, red, 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 with a couple of exceptions. Gold right now is down almost 1.2%, down $23 at 1963. Silver is down 2%, down 56 cents. A little bit of price smashing going on in precious metals. We talked about copper down 2%, platinum down almost 2%, palladium down 3%. Natural gas down almost 9% today. What's going on in natural gas markets? Well, they can afford it. Gas has run like crazy. U.S. natural gas has now very quietly doubled this year. Surprised to see that. I don't know if that's the effect of European LNG demand driving up prices. Is that the effect of the lack of permits affecting production? I don't know. I guess a deep dive is needed for natural gas. We got to figure out what's going on in those markets. Oil, as we mentioned, down $3.72 or $3.50, now at 103.94. Nickel up 1.6%. Nickel markets are still a mess. You can't really pay attention to what the price of nickel is doing anymore because it's meaningless. JP Morgan will just turn it off if they don't like what they see. Food commodities doing the same thing. Corn down about 0.5%, soybeans down 0.2%, and U.S. wheat is up just barely. I just got a text from Mish saying, hey, Sage News is in the chat. Hey, Sage, how you doing? I just did an interview with Sage yesterday. I hope you guys saw that, covering the fertilizer story and the rail story coming out of CF Industries and Union Pacific. Sage did an awesome job breaking that down for us. Go out and check that video out if you haven't seen it already, and subscribe to Sage's channel. When it comes to the supply chain and logistics and transport and this whole mess that's going on in global supply chains right now. If you want to understand what's happening, you got to be following Sage's channel. He's really excellent. I discovered him the same way most of you probably discovered my channel, via the Economic Ninja and a lot of the appearances he's made over there. So Sage, thanks for coming and hanging out with us this morning, brother. Appreciate that. All right, what else we got going on today? Let's revisit our markets. It is 9:35. Markets are now open, and looks like we got just barely positive on the S&P, up 7.5 points. Looks like it wants to head higher. Dow is up 120 points. Why not? Onward and upward. The whole world is going to heck in a handbasket. Might as well have a green stock day. The NASDAQ is down where it belongs. Crude oil 104, gold 1966, silver 25.67. And where is my 10-year yield? My 10-year yield is at 2.91. Keep an eye on those yields. If they keep going up, there is no Federal Reserve to suppress the interest rates anymore, and markets are not willing to make loans for paltry 2% interest anymore, not when inflation is at what it's at, 8.5%. That's the number the government will admit to. Obviously, it is a lot higher than that. All right, let's take a look. Some of the things that I have been following lately, I have been following the VIX very closely. That's the CBOE Volatility Index. I've been short, basically short the S&P 500 for a couple of weeks now. And the way I've done that is I bought call options in this volatility index, which anytime you get major down days in the market, the VIX spikes dramatically. And I started buying couple of weeks ago when we were down in here, and the VIX really has been struggling to overtake this trend line. But at this point, I am still buying into that. I've been gobbling up a couple of, not gobbling up, I've been nibbling on calls a little bit at a time every couple of days as we've been trading in this sideways channel right now, because I think any day now, we are going to see this VIX rocket probably into the 30s and, dare I say, into the 40s, and we'll have one of those 1,000-point days when nobody knows what's going on, but the Dow just suddenly drops 1,000 points within a couple of minutes. And all the talking heads on CNBC are trying to explain what's happening. So that is my big short that I have in place right now, partially financed by the profits I've been making in this corn ETF that you're looking at now. Let me make sure you guys can see my charts here. And my melon's in the way. Let's put me down here. Corn just continues to march higher, although it's down a little bit today. I sold the last of my January 2023 calls in corn yesterday. They were just so deep in the money that there was no point in holding them anymore. And I actually moved the date up. I bought some August calls with some of the proceeds. I took some of the cash off the table. I also bought some more of those VIX calls with the proceeds. But this one, again, the corn story, this has never been a Ukraine story. This has never been a Russian invasion story. That was always just one of those things that might aggravate the corn situation. My corn thesis since as early as October has been about this fertilizer situation, because corn needs more fertilizer than any of the other major grain crops. And that story has not even begun to play out. We're just hearing news about 4 million acres less corn getting planted in the U.S. this year. But the estimates, like the WASDE report that the U.S. Department of Agriculture puts out, has not reduced American corn production estimates at all for 2022. All right, so according to the Department of Agriculture, with the price of fertilizer quadrupling and with 4 million fewer acres planted, somehow American farmers are still going to produce the same amount of corn this year. If that doesn't pass the sniff test to you, you're not alone. So I think corn prices are going way, way higher from here. Now, that being said, I'm just looking at the RSI down here, which is a measure of the momentum, and it's really high in the 70s right now. So corn is due for a pullback, all right? Like we got here back in mid to late March, we had this little pullback here, and we traded sideways a little bit before that. I think we could see a short-term pullback that would be a good buying opportunity. I have some cash on the sidelines. If I see that pullback, I will be buying even more of those August call options in this one. Again, not a financial advisor, not financial advice. Just calls them like I sees them. Another one I've been watching a lot is LNG, Schneider Energy, and this one is back in that channel that I drew a couple of weeks ago. I have been talking about how this one looked like it may have been breaking down in the chart. It has recovered a little bit since then. and it's right now hugging the bottom line of that channel. I still haven't added to my position here, and I still haven't sold it. I'm just waiting and seeing right now. I'd like to see this move upward a little bit above, hopefully into the mid 140s, which would suggest a move higher. But I do see some things that are worrying me about Cheniere Energy. I see American natural gas prices are on the rise, and I see European natural gas prices are coming under pressure, heading a little bit lower. I don't know if those trends are going to continue, but if those trends continue, that would mean the profits in Cheniere Energy would be getting squeezed, and this one would come back down a little bit. So we're going to keep an eye on that price differential between European gas and U.S. gas, and if we see that start to shrink, I'll probably be taking my profits in Cheniere Energy. All right, it is now 9:41. We're going to take one last look at the markets here before we check out for the day. And I see, it looks like flat. The S&P is up 5 points. Can't really make up its mind where it wants to go. Dow, another 100 points. Sure, why not? Up another 100 points. And the NASDAQ down about 0.25%. Again, the NASDAQ, keep your eye on those Netflix earnings later today. If we see anything about disappointing subscriber additions or, God forbid, subscriber losses in Netflix, then the NASDAQ is going to be down big tomorrow. Keep an eye on that one. All right, guys. I think we are going to call it there. I want to thank you guys for your time. Thank you for watching. Big shout out to my Patreon supporters. Thank you guys for supporting the channel. I could not do this without you guys. Thank you to everybody who sent me super chats. And won't you please like this video and subscribe to my channel. And until next time, live small and dream big.